What's up, everybody? It's your boy Kid Crypto, and I'm back. I swear, I do not intend to make these videos so far spaced out. It's been a brutal winter here in the Rockies, negative temperatures, snowstorms like crazy, and I got animals and things that I got to look out for. So just priorities. But excuse me, as many of you know, one of my big priorities and passions in life is crypto, especially XRP, SHIB, XLM, even Bitcoin. As many know in the space, there's some uh, weird blood there. But ADA, Soul, just different cryptos I dabble in. But I feel like there's a very important purpose for this video and the reason why I'm creating this video. And that is I want to touch base on, what's the overall outlook of the markets, how one can look at such, how to cipher through, for example, influencers are telling you that the top is in, or hey, oh my God, no bull run, or whatever they're trying to tell you. Oh my God candle tomorrow. I- Again, what I challenge people to do, and this is not financial advice, but as someone who's a data nerd himself, data engineer in his work life, etc., uh, read the data, right? And that brings me to the page that I'm right here, CPI. Today we had CPI release. And these are important factors that we hear about our federal treasury speak on how these affect our markets, right? Especially the crypto market. Some terminology we've seen thrown out there is quantitative easing and quanti quantitative tightening. So if you don't know what these are, it's just a monetary policy. Both of them are monetary policies. And just like it sounds, the central banks are where, so easing is where they're buying assets, right? And tightening, you can think it's the opposite. They're selling their assets. So logically, what can one think if they're buying? Quantitative easing, right? I keep trying to say easing. I don't know why. So, anyway, quantitative easing is them literally being bullish, right? They're buying up what's out there. They're inflating their net positions, their balance sheet. Whereas tightening is them selling off their balance sheet, right? They're reducing their holdings. So the reason why that's important is Jerome Powell, the Feds, they all talk about how we look at CPI, etc. So when we have influencers out there telling us the top's in or this, one thing I'd like to note is I don't think they know what the hell they're talking about. Because let's be honest, they're all doing the same thing, trying to predict the future. That's not what we're here to do. Now, we can use past data to try to help us make sound decisions on, okay, 1,000 times they did it this way. Again, they're hedge funds. That doesn't mean that the thousandth one time they're going to do exactly that same way. As we are now front running crypto here in the US, the largest GDP in the world, it only makes sense that we're actually not mirroring exactly how we've been moving the past several cycles, right? I mean, can we agree there? Think about it. Just my father and I, we talk about this all the time. Just back in 2021, when I had my run up on SHIB and I was having a blast. Uh, at the time, China was banning crypto, mining, and Bitcoin, anything. News was bad, the administration was bad, everything. Fast forward to 2025, not one of us was, I mean, well, if you ask my friends, they call me an alien because I was actually foreseeing it, but I'm not here to even play that card. I'll let you ask them. I'm not here to validate anybody on the internet or need validation from anybody. So, uh, but that's neither here or there. Majority of us never foreseen that coming, right? Oh, America's now front running crypto. So how can you really project that into your analysis of, oh, well, we've moved like this the last 4 years. Okay, well, that doesn't really help us because now so much has changed, right? We're about to get regulation clarity. We're about to have an actual administration that's embracing the innovation and taking it to where we can have the stock market fully involved. And that brings in big money, right? Now you got banks, institutions, hedge funds, and then all the retailers piling after because they realized, oh, okay, well, I want to get in because all the rich people are. Well, think about it. You're in before them, right? And the reason why I keep bringing this up is because I don't want y'all to get got. If you look at this data and you look at the information in front of you, you don't need to hear somebody on X putting this chart that shows you, oh my God, look, the past 4 Februarys after this, we go right into altcoin season. Bullshit. Okay. Y'all don't know what the fuck you're talking about. Because none of y'all told me that XRP was going to run up from 50 cents all the way, except those that were in it. Not one of y'all doing this technical analysis, except those that were in it, right? Because we were seeing that there are catalysts and things that we can't foresee, right? So we can agree there too. Okay. Now that we got that clear, let's go ahead and break this down, right? So how I do it and what I like to do, and don't worry, we'll look at something like a chart here and how to identify if you put in positions. So this is a position I put in here. Stop loss, basically break even, very small, but you can see how I got in, and I'll explain why I took that position and what caused me to. I don't care if I get stopped out. I'd rather get round tripped 100 million times and not gamble my capital and stuff. And you can see I'm only playing with $200 right now, just playing. This is a no name exchange. I'm not going to show my Kraken or like my main accounts, but these other exchanges that I play on, I go and I do hedge positions on. Like I'll do a hedge short or hedge long, or I'll scalp, etc. Um, but the reason why these are important, coming back to the data, right? What I challenge people to do, if you're first, I challenge you to figure out what the hell you're doing, long term or short term. Okay. Seriously. If you're a long term holder, you shouldn't care that you bought today and what the price is tomorrow unless you're dollar cost averaging. That's not financial advice, that's common sense. Okay. But if you are long term holding, it does help to look at, data to get an idea of where the market is. Is it a good time to buy or not, right? Um, so CPI came out today, and if you're looking at CPI information, okay, you can go to the PDF here. You can see it's a slightly had a rise in it. Okay, I'll let y'all read through here. I've already read through this. I'll let you go through the data and see what rose, what didn't. But it was it's what they call sticky inflation, right? So to me, again, bearish short term. That's what this data is literally telling us. Okay. The other way we can see that is, let's go over to our FOMC minutes. Okay. If we look at our most recent one here in 2025, okay, and we think about these terms here, and I'm going to bring up this one now. Reduces. Okay. Remember that. All right. So if they're saying it reduces, if I come in here and I start to read through, the committee will continue reducing its holdings of treasury securities and agency debt and agency mortgage-backed securities. So they're still tightening. They literally told us what they're doing. Now, even though they're tightening, that does not mean that they don't play around in retail arena. That's one of my favorite terms. And we'll get into what retail arena is here in a second when we look at the charts. So just remember that. But they told us, hey, things are still tightening. Okay. And the way we can see the difference is, all the data is right here. Just scroll back to 2020. I already know where the specific month is when it started. But if you go to 2020, November, they told us what they were doing in November. Okay. November 5th, 2020. Anyone that says, oh, I missed out on 2021's bull run, well, should have looked at the data. Told us, right? Literally tells us right here a maximum point. Okay. And what does it say right here? In addition, overcoming the month's Federal Reserve will increase its holdings of Treasury securities and agency mortgage-backed securities at least at the current pace to sustain smooth market function. Okay, think about that. The one that we just saw back in January said they were reducing. This one back in 2020 said they're increasing. So 2020 they told us, hey, we're bullish. We're going to be inflating our balance sheet. Money printer goes brr, they're printing money. Okay. Making it easy for risk on assets. So you look at today, well, things are still tightening. We got a new administration. That doesn't mean that things aren't bullish. They're just bringing down the inflation that was so sticky after such a pandemic and all these other factors that come into play, that again, it's slightly decoupling out of this normal trend that we just had. Everything in the past, everything followed Bitcoin after the halving. So it was so predictable. So they have to break that, okay? Because now retail can even guess it. That's not what they want, okay? Let's be real. And so anyway, I challenge y'all to come here, look at some data, okay, come back to the final, see when they kicked it off and what price did, like come over here, look at the release dates. Okay, let's look at one together. October 24th, or sorry, October 2024. Okay, we'll come over here and see, oh wow, then they ran it right up to the next leg right after. Okay, and then go read that data, right? So read the CPI data from October 2024, which is available on this website as well. Okay, see what it said versus what it said in January. Look at the chart in October and in January and be like, get an idea. It's not that hard, right? So then do the same thing here. See when they're tightening and when they're easing. And when they're tightening, you'll be like, oh, that's when they're starting the big sell-offs. Oh, this is when they're easing. All the risk on assets start to climb. Okay. And it'll start to make sense. That will help you with long-term and short-term, etc. Trading and all that, that's a whole different story. We'll get into that later. Different streaming things if people are interested. I mean, I love it. It's something I do. I mean, again, I trade all the time. It's fun. But I also pick, my spot. So like for example, here, if you're drawing fibs, etc., one could argue, depending on, if they want confluence, one could argue, oh, why did you take the trade down here? Well, okay. Oh, he took and again, it depends on if you know these levels or not, but technically it's like taking a 382 trade. I grabbed below the 382, actually. I grabbed the 236. Okay. I was looking, and so anyway, these Fibonacci levels and stuff, this might hurt your head. So nerd out on fib levels, etc. I think there's like 22 of them if I'm not mistaken. Um, but again, I wanted to show this because this is something we can dive into a whole nother stream. But diving into the charts, okay. I mentioned a term when you're diving into this data and you're comparing it again, go back and look at 2020 and 2021. Look at some of the Fed minutes, the CPI data, PPI data, the unemployment rates, etc., and compare it to what we're getting now. That will help you when you're looking at the chart. Say, okay, this is what it did then. This is what it. Oh wow, it's kind of mirroring it. Okay, it's similar. It's pushing down when the data's bad, etc. Whatever. It literally lines up perfectly. I've gone through at least 3 years worth of FOMC meetings now. My head hurts from looking at all their PDFs. But anyway, when you do that, you will start to see what they do and how they do it. Okay. And what I'm talking about they is I'm talking about market movers, those who have the money and the ability to move this market. So what they're also doing is allowing retail to get wrecked through retail arena. Retail arena to me is this value area high and value area low, right? It's literally here and here, these. So you can see here's previous day value. I could do the current day if I want, but all you would do is just draw where the most action's happening from top and bottom. It's literally that simple. I mean, if I came here, I could draw across here. Technically, I would want to draw across right through here. Yep, right about here. There's the value area. It's almost right with the weekly low, right? So top, bottom up here, and you long the deviation outside of the retail low, and you short outside of the retail high, right? So that's just a concept. That's why they call it retail arena. If you've ever heard that term, or when people are referring to value area high and low, that's what they're talking about. But easy way to see that as well is when you zoom out on a chart. So another way to do that is trading view. I use trading light as well, and I'm not going to show that because I'm working on putting something on the blockchain right now. It's one of my goals, so I don't want to spoil it because it's an indicator that I'm creating myself. But if I go here, and what I'm just wanting to show y'all is I basically want to show you how you can identify these levels, right? So let's go in, let's just do 1 hour. Really easier to see retail arena. Okay, so here we go. So right across here, you can see the deviations, right? So if I draw a line here and here, short, that would have been a nice short, bing bong, and then it came back up, short, thing about, and make sure you take profit. That's not financial advice, that's common sense. If you don't know how or when to take profit, that's a different stream. We'll nerd out on that as well. This is me scalping. If you're doing this on a bigger time frame, again, you get bigger positions because here's retail arena right through here, where it's basically like point of control is right through the middle, right? Okay, so then you short up here and you could long right here. You long the deviation, long the deviation, long the deviation, short the deviation outside of retail arena. All right, so this is Kid Crypto. I just wanted to jump in here to kind of break down what's going on out there because we're seeing influencers saying the top's in, we're seeing influencers saying we're about to God candle tomorrow. In all honesty, it's short-term bearish just for what we have currently, but that does not mean we're not going to have a beautiful bull run. There's so much coming, right? America front running. We got a crypto Cesar, crypto cabinet. We have tasks for it. Everything is coming together. Give it some time, let it piece itself together, and let's see it unfold together. We got to fall in love with this journey, right? Don't fall in love with the influencer just putting out a clickbait trying to get a million clicks and views and impressions, whatever the hell you want to call it. Actually come here and look at it. Go look at old FOMC and be like, okay, when it or CPI, okay, when CPI rose this much, the charts did this. Compare it to S&P too. Go look at um, S&P and look at their chart because this is something that I'll have S&P's chart next to Bitcoin's when I'm watching the market. Okay, so that's something that I'll do. So when you're doing this, just make sure you're looking at the actual data, not just taking what somebody puts out there. So, if you're coming here looking at the data, now some might say, well, I can't pay for that. I can't do this or that. The main things people are using here, net longs, net shorts, they're trying to see who's getting squeezed with open interest, right? So if you want to see something like that, I think it's Coinalyze. Yeah, Coinalyze. So come to Coinalyze. Okay, they're gonna aggregate across multiple. So if I come in here and want to do like XRP, for example, okay, indicators up here. So add your indicators. So I would go aggregate. Make sure you add your margin contracts, and then you can do let's see here, net data, yeah, visible range, open interest. Uh, those are what I'm starting with first, and then I'm gonna break it down by exchange as well. So here's like a free option for you because you can see here's the different exchanges. Okay, so just start here, and then until you can afford the ones that people are paying for. This is ExoCharts. I'm paying for this, and I also have a feed coming from DX Feed to look at CME and futures that and basically Nasdaq date, all that stuff on Wall Street and that junk. I'm not going to bore you with, but you can see I'm about to get stopped out here. So some people are like, why would you call it? Why would you take the price? I mean, I'm retail. I want to get stopped out. Hit my stop loss. Let me re-enter. Got round trip. I don't care. That's the point of these types of trades, right? When I do catch it and it is juicing, I take my profit on the because this wasn't enough juice for me to take profit. It was like, I don't know, $30. And someone will be like, oh, that's profit. Not enough for me. So, um, anyway, stay safe out there, XRP Army, crypto space. This applies to all cryptos, whether you're in Solana, Ethereum. Don't let these people on X who are literally going around telling you Ethereum's dead and all this stuff. I mean, if Ethereum was dead, let's be honest, okay? If it was dead, would it be moving the exact same way as these others? Come on. Like, be real, people. Come look at the data. Come look and see what it's telling you. Realize that the Feds literally told us what they were going to do, that they're reducing their balance sheet. They're selling their securities, etc. They are selling. It is bear. So take your picks. Maybe you sell and you sit for a little bit and you buy back in. Not financial advice. It's just a consideration. If you bought higher up in the $3, dollar cost average. If you don't have the money, I understand that. That's the selling part and buying back in at a lower price might come in handy. But do it all at your own risk. But stop blaming everybody else. Stop blaming crypto's a scam, this, that, and when the data right there is telling you exactly what's going on. That's what we're here to do. We're here to read the data, not predict the future. So again, people, I love y'all. Stay safe and just know until next time, maybe we'll do a bigger stream on like trading and then breaking down some other coins. I don't want to just do XRP or SHIB and bore people either, even though I hold them dear to my heart. But before I close this video, let's just check the SEC website for good luck, see if any new filings came in. If I check this, it should say 938. Yep, so nothing new came in yet. So I like to check that to see if there's any new ETF filings or anything like that, but not yet. So stay tuned, people. This is Kid Crypto. Until next time, see y'all.